You finish me. Anyway.
Virtual assets. What are those things? Now, there's even apparently it's a big thing, such that there is a bill to try and put them under some form of regulation. And that bill is in Parliament, has gone through Parliament. We've been talking about it, we've been seeing it here in the news, like, okay, so there's a bill here. And in fact, when we spoke to the chair of the Finance and Planning Committee, Kuria Kimani, many months ago, was it early March? He told us, by the way, there's a bill that we're processing that is going to be a very, very monumental bill. And that is what he was talking about. What are those virtual assets? In Kenya, there's even a Chamber of Commerce. The chairman of Virtual Assets Chamber of Commerce is Tony Olendo, and he is here to be our next guest. Tony, good morning.
Morning.
Karibu sana.
Asante, asante.
This is where we fix one conversation at a time. We create awareness and we get to learn. As we get into this conversation, and you'll tell us what the virtual assets are, what your Chamber of Commerce does, and then come into what this bill is all about. First, Janet is going to give you the day's virtual quote.
Virtual quote.
First of all, that virtual assets thing, imekusumbua from 6 a.m. You're like, I need answers.
What is a virtual
What is
asset?
Kafroti, you can go and look at the pico. Okay? This thing
that you can't touch and see. Today's quote is from Trevor Noah back in 2019. He was commenting on access across the board, and he said in an interview, if the system doesn't work for everyone, it's a broken system. What are your reflections on that?
Very true. As somebody who's built on blockchain networks, that really is like the core ethos of it, where everybody has equality of access, anybody and everybody could actually innovate. There's a very good friend of mine from Nigeria who always says that talent is evenly distributed, but opportunity is not. And that's a big part of why I actually got involved in this particular sector.
That's a future who said that. Talent is equally distributed, opportunity
Evenly
is not.
distributed.
Opportunity is not.
Opportunity is not.
And we need to fix that.
Yeah.
Yeah, that the opportunity should be as equally distributed.
Yeah, because we have very many kids in Kenya who are talented, but you don't have the same level of access to opportunities, and that then creates a very skewed reality for us.
Okay.
Where?
Please start by answering Eric's question on what virtual assets are.
So virtual assets, let me start by explaining just basically what a blockchain is, right? Clearly. So imagine Mukona Chama, right? And there's one person you've appointed to maintain a list of all of the contributions. And you put all of your trust in that single individual.
We call him or her treasurer.
Treasurer. Yendio, msema kweli. So the treasurer keeps all of the records of the contributions and also the payouts. And what essentially might happen sometimes is the treasurer might not put the right things, might be incentivized not to, record things in the way that actually makes sense. And so you then decide, no, everybody's going to keep a copy of this. And so now you have to distribute it across everybody, and then everybody retains that. And so now everybody is actually essentially becomes a treasurer. And in the same way, that's essentially how blockchains function and work, where there was a centralized authority that we all trusted before, be it your bank, be it M-Pesa, be it your microfinance institution. But then people said, we don't need the middleman. We don't need the treasurer to actually come in the middle and be able to maintain this ledger. We could do it digitally, and this is how we're going to organize it. And the way that the transactions are actually added to this particular ledger is actually cryptographically secure, which means that nobody could change it, and everybody retains a copy of a copy of it, but it's actually distributed globally.
So, using this example of the Chama, what we're saying is, I go to the bank. I know I'm supposed to deposit 50 bob. I deposit 50 bob. The bank gives me a receipt and sends all the other members that receipt.
So, yeah, essentially, that's essentially what happens.
Janet goes and does her deposit. Bank sends all of us the receipt that she has deposited.
Exactly.
And it's tallying. Is it adding now? Are we at 100?
Tallying because remember, it's actually running on top of a computer, and so the calculations are being made, and the balances are being updated. And if I transfer money from me to Janet then everybody actually gets a record of that.
Okay.
Yeah.
But this thing that is developing, this thing that is sending to Kinami and Janet, who's running it?
That's actually the beauty of it. Because of the way that it's actually distributed technology, everybody could run it. And everybody has a copy of it because...
Who is generating the copy?
So the copies generated in a way that Janet could actually generate and submit a transaction, and you could submit a transaction, and then we have a consensus mechanism that essentially records and resolves everything. Yeah.
Okay. Okay. And it's not possible for Mariam to claim the shares deposited, and yet she hasn't.
So now that's actually the beauty of the security of the technology. If Mariam comes and says, you sent me 500, but it should have been 450. Remember, all of the transactions before are linked together. That's why it's called a chain. And so if you change one, it means everything has to change. And so the dispute would actually be easily resolved because it says, Pana, us, we have the records up until this point, and it's not only me, it's Latif, it's Janet, it's John, it's Mbogwa, and we don't recognize this particular transaction because it didn't happen.
So Mariam anakuwa exposed to hivyo kama fraud.
So
basically.
Okay.
Basically.
Okay. That's the blockchain technology. Before we get into this bill, what's a virtual asset?
So the virtual asset is essentially a cryptocurrency that sits on top of this particular blockchain. So it's actually tradable. I could transfer it to you. You could transfer it to me. And so what the underlying blockchain technology did, where it was called distributed ledger technology, it basically allowed for the development of cryptocurrencies. And so now there was a payment dynamic added to this particular blockchain. But if we just go back to that particular transaction, a blockchain can be used for a land registry. So you can imagine in Kenya I've been in a situation where how many title deeds exist for a single property. It's very easy to resolve because you remember everybody has a copy, everybody has that.
And we can trace like who had the first title deed, right? So then we don't have to go to court battling over this title deed.
Yeah.
But then when you add a payment, when a payment component to the blockchain, that becomes cryptocurrency.
That becomes cryptocurrency.
Then when you do what, then does that become a virtual asset?
Well,
when you trade and...
A cryptocurrency is the same as a virtual asset. That's essentially what it is. So you have Bitcoin, you have Ethereum, you have different forms of them. These are just cryptocurrencies that have that payment dynamic to it, or like transfer of value.
So anything that holds value that's sitting on blockchain can be considered a virtual asset.
Yes.
Yeah. Okay. And do they go evolving? Do some die out? Like, how does it work? They've been talking a lot about NFTs. As an example.
Is there crypto 12 Pro, crypto 13 Pro Max?
Certainly yes. So Bitcoin is the OG. It's the one that started, I think, 2009, I believe, or 2006. I stand to be corrected. But that was the first, like, real strong. It would be 2009 because it was on the back of the 2008 financial crisis, where Satoshi, whoever they were, decided that they were going to create a cryptocurrency that would basically remove the middlemen. And they were looking at the collapse of the financial system and the greed that created that subprime mortgage crisis that we saw. And so they wanted a system that could be used for payments that didn't need a intermediary. And that's how they essentially formed Bitcoin. But if you really think about like the way the internet is structured, I can send a message to somebody in China right now, and they'll get it immediately. But I can't send the money.
Have you met M-Pesa?
Yeah, no, China.
Okay.
China, yeah. So if you're looking at like the payment system, it's very siloed across various countries because of regulation, because of different economic dynamics. But it's not entirely easy for us to transfer value over the internet. If you're using PayPal, there's a lot of challenges there. And so blockchains kind of emerge as a solution for that instant payment and settlement system between various countries.
I know it's a question you get a lot, so you're used to answering it. The way our financial system is structured is, we used to do currency backed by gold, then not so much. But then there was a backing, and then there's an understanding, and there's factors that play into the value of a currency. All of those things. With crypto, especially, and a lot of virtual assets, it's more speculative, if for lack of a better word. What is how do we arrive at the value of any virtual asset?
Right. So there is a strong speculative component to the pricing of digital assets. Why? Because imagine we have the first global open financial system where the value of a thing could be driven by what market sentiment says, supply, demand, projected future earnings, and generally the vibe of the particular product.
Like,
right?
What's the dog meme coin?
Doge.
Doge.
Yeah. Doge. Yeah. So
Right.
Doge is one of those examples of just like the marriage between internet viral culture and speculation. And so people want to pump that because we like it, we feel it, and some people could actually invest and all those things. But speculation is just one aspect of it. So there's a very strong side of it, which is stable coins. And stable coins are essentially a virtual asset that's pegged to the value of a particular currency. And so now we have US dollar stable coins that have emerged. And the US dollar stable coins are currently capitalized at about 250 billion overall, and people are using them for payments. So Kenyans are using it to be able to buy goods from China because they settle faster and quicker, and Chinese traders are actually accepting them. And so there's massive levels of actual real everyday use cases that are actually emerging. But then beyond that, there's also people who are looking at the realm of tokenization, which is basically putting more and more assets on chain. If you go back to the Chama, we have the example of the Chama where you could actually put your own Chama on chain, but people are putting real estate. There's a lot of talk about government bonds being put on chain and so on and so forth.
Give me an example of real estate on this blockchain. How?
Yeah, so there's actually a local Kenyan startup called Alpha Block that has been building in that particular space, and there's a few others where you could actually transfer the property rights from one individual to another using the blockchain. And basically what that means is that you could incentivize foreign direct investment, but then the payment and the settlement and the transfer of all of that happens purely on chain.
So you'll still have to go to Athi House anyway, to Athi Sasa, and to do the transfer, right?
Well, the title deeds are custodied by a single entity, and then they basically issue an NFT that represents that particular value, and then the holder of the NFT is the one who actually has the property rights to that particular piece of property.
Isn't this where regulation comes in then?
This is where now regulation comes in.
To streamline.
Yeah.
Even as we go into regulation, why the regulation, especially around crypto, why now, and who stands to gain, who stands to lose out?
So let's take a step back and look at where we started as a country with this whole virtual assets cryptocurrency game. It was 2015, and the central bank sends out a circular to all banks and tells them, do not deal in crypto. Don't touch it, don't bank them, don't do anything. And that then created a really difficult situation in terms of adoption. And if you're looking at it, it was particularly unfortunate because Kenya is regarded as the Silicon Savannah. We are the home of M-Pesa. Apple Pay was based on the innovation that Safaricom built. And then we have this new payment space, and we chose not to innovate around it. And so after that, there was a exercise led by, I think, Bitangendemo, where they actually did like a whole
So the task force,
yes.
That was established by the former CS for ICT, Joe
Mushero,
appointed Dr. Bitangendemo and others into this task force to look at the viability of blockchain and whether even government can adopt blockchain. What happened to that report? Okay.
Yeah. Yeah.
So it was presented.
You understand government. Whenever in government you see a task force, it means two people didn't agree.
Okay.
But then the reality is that we still then fell behind. And then there was like a complete lull inside of that sector for some time. But in the meantime, you had different startups emerging that began to leverage this particular technology. You had different individuals and developers starting to actually build. And even though we did not have regulation here, they started working for companies globally. And you have a nascent sector that was actually building and forming. And we have quite a number of startups now that have been existing, but they've been existing in regulatory limbo. And so
we don't know anything about you, so laws don't exist for or against you.
Yeah, so it's kind of that. Like you could be banked today, tomorrow you're not banked, a person shuts you down, something of that sort. Like it just created a very weird scenario and situation. And so over time, what we then began to hear from the regulators is the need to be able to start to regulate. And then what helped us the most is that Kenya was grey-listed, and there was a need for them to come up with sound regulation. And so there was a technical working group that was formed that comprised the National Treasury, the Central Bank, CBK, I think it's FRC, and a couple of other agencies, where they began working on a particular bill. And I think it came for public participation in January, and we as a virtual asset chamber were able to actually give feedback. And it was eventually tabled in Parliament for the first reading, and that was sponsored by the Leader of Majority. And then we entered a public participation exercise where there was the I think the Finance and National Planning Committee went across the country. They received feedback from across the country, but also I think about 9 different stakeholders were actually able to actually submit their views. And I think of those, most of those proposals were actually taken. And the Virtual Asset Chamber was one of those institutions that actually did that. And we saw, I think, upwards of 80% of our proposals being actually accepted, which is a very, very good thing. And we're now at the point where we're considering the 3rd reading. But crucially, I'd also like to point out that there was also the dynamic of the taxes, right? Yes. So on the one part, the central bank says, don't touch crypto. And there's a circular that's essentially gone out that says, do not touch crypto. And then you have KRA that says, we're going to slap a 3% digital tax on everything, on total volume. And that law was really misinformed, because it's like, imagine somebody charging you 3% for every M-Pesa transaction.
It's a ridiculous amount.
It was a ridiculous amount. And if you're moving money from your left pocket to your right pocket, 3%. If you move it back, 3%.
Another 3%.
Well, you're moving it, keep it there.
Because I was even going to say, how do you do ethical crypto governance when you're battling, when essentially there's corruption at the core of everything?
At the core of everything,
How do you balance that? How do you actually push for ethical crypto regulation?
So that's actually at the core of what we're actually looking at inside of the Virtual Asset Chamber, but also just in the way that this particular piece of legislation has been written. I think the technical working group did an excellent job of creating a very good framework, because the main people you want to be able to regulate are the service providers. So if I am a service provider, meaning that I'm either providing a wallet, or I am allowing people to exchange digital assets, or I am doing deposit and withdrawals to and from crypto, or I'm building tokenized real estate, I could actually be registered by the government, and I could from that point I could meet solvency requirements. I could actually have a bank account. I have a physical office. You know me, I know you. And I could advertise now, but under the banner of being regulated.
Right.
And so that actually creates a very, very clear framework for us to be able to operate inside of the country.
It does, but then I worry about if it's a bit defeatist to the whole point of cryptocurrency, which is to sort of decentralize and, because then that means if I'm not wrong, the bill does provide that now individuals can't be service providers, right? It has to be a company registered, all of that. So then isn't that a bit defeatist to the point of blockchain, which was to decentralize things?
So it's important to understand that the bill is designed to regulate the service providers, not the individuals.
Okay.
So an
Who's
individual,
a service provider?
a service provider is somebody who built a tool. So I've built something that is going to be used on the blockchain. So this is somebody who's building a wallet. So a wallet, because you need to be able to hold a balance. I'm building an application that utilizes blockchain technology and things of that nature. So across the world, it's not individuals doing that, right? Even the largest, even the largest blockchains and the largest applications, they're registered somewhere. They're registered in the BVI, Caymans, Singapore, Hong Kong, different jurisdictions. But it does not take away from the individual rights for me to hold cryptocurrency, for me to use it the way I want, for me to be able to do that. And the whole thing that the government is saying is, if it is you want to provide a service and you want to take Kenyans' money, please be regulated.
Okay.
Which to me makes a lot of sense, because we've seen all of the scams. We've seen the impact of not having regulation, because you have honest business people like myself who are actually trying to provide a service, and then you have people who will go and they will create WhatsApp forwards and send them to your aunt, and you cannot convince her edgewise that this is not a good investment. And because we like quails and quick money in Kenya, they go and they invest, and then they come back and they say, crypto, happen.
You said quails.
Yeah.
You took us back there. Tony, we were still healing.
I just dated myself. I know.
We were still, actually, John Wangi says, with so many scams, how can I know which platform or coins are legit? I think you've spoken to that. Bakari Sagnas asks, how can the Kenyan government leverage on blockchain technology to improve judiciary e-filing systems, land registries, and NTSA systems?
That is the main. Those are the bigger pieces, I think, to move. Because, like we said, if you go back to the Chama example, as a central book, but now it's distributed, we all have it. It creates a pathway for all of our registries to come on chain. It even creates a pathway for our elections to come on chain. Because if I go to the ballot and I actually say, yeah, this is who I want, and that is recorded on the blockchain, nobody could change it. Nothing could happen. That's it. You know. But I feel as though we have to start from somewhere, and so we'll start off with the initial applications. But I do think there's massive levels of appetite, I think, across government to be able to see some of these applications being leveraged.
Okay, what would be the cost and the burden of compliance for now for virtual asset service providers? Yes, and aside from that 3% tax that we've spoken about.
Right. So it's really, really great. I know it's hard for me to say this, but like the government listened to us as the industry, because we made submissions. And in the last finance bill, that was removed. That 3% digital tax was adjusted to a 10% excise, like 10% on fees. So if I'm a service provider and I'm providing you a service, the government says give me 10% of that action, which is absolutely fine and loads better than how it was before. So there is evolution, and Kenya is readying itself for actual investment through some of those common sense adjustments in terms of tax. Now, the new bill creates, there's a lot in terms of regulation that still hasn't come out. So we have the initial bill, but then there'll be subsequent legislation that will come out, that will map out things like compliance and all those things. The balance that I think, even in talking with the Treasury and the Central Bank, they were very, very keen to ensure that we actually able to balance compliance, we're able to balance anti-money laundering, counter-terrorism financing, and not make it too onerous for that kid who's graduated from university to come and innovate and build. Right. And there'll always be that bit of tension, which will exist. But I think I have confidence that the sentiment from the regulators and the legislators is that they want to find a balance.
Okay.
Yeah,
That's
they want to find that balance.
That's really good to hear. And I like that you've also spoken to us getting off the grey list and to anti-money laundering tactics, anti-terrorism financing, all of that. For people who may not be familiar with crypto, and with virtual assets as a whole, exactly how does it play into whether it's terrorism financing, money laundering? Has it played any role in us getting grey listed? What does that mean? And then how does this virtual asset service providers bill get us, in line with some of those things?
I love this question because I love debunking this particular myth. Everybody says crypto is for gangsters and all those things, right? And like there's all of the, everybody says that, right? Now, if you look at the numbers, from the standpoint of virtual assets and like crypto generally, I think the figure was about 3 trillion was laundered in the last year, and crypto represented 22 billion of that. So that's less than 5%, less than 1% there,
Less than 1%.
But now the question is why, right? Remember the Chama example. All of these transactions, everybody could see them. So because everybody could see them, how am I going to launder?
Yeah. I mean, everybody can see.
Yeah, because remember, you have a
That's
copy.
how we started.
I have a copy.
Eric.
But it's only members of the Wait.
No, it's publicly
The
available.
Chama is all of us.
Yeah.
All of us are in the Chama.
You continue. I'll ask my
You
question.
didn't. You didn't get your membership card. I thought that by the time we started, that would have been settled.
Okay,
Yeah,
continue.
but it's essentially the same way that anybody can hold Bitcoin, right? Yeah. So inside of that
So
Chama
any Bitcoin payment
it's transparent and open by default.
it can be seen by anybody holding a Bitcoin.
Yeah.
Right?
Yeah. So
Anybody who holds a
there
Bitcoin
is-
now can see who is
they may not know.
transferring.
They may not know this is Janet, but they'll know there's a
There's money
person
that has gone to
and they
some
hold
entity.
this amount. Yeah.
Okay.
And that's what aids law enforcement and all of those agencies to be able to actually track down all of these transactions. And that's why we needed that piece, even inside of our own legislation, to be able to now create a system that we could actually track all of that, right? So if you look at the recent case with Equity Bank, there was a bit of that money that was funneled through to Binance, right? But then because you have a virtual asset service provider, the enforcement agencies here were able to contact them, the funds were frozen, and now there's now the question of how the funds are going to be returned. But like if you actually have regulation, these things could actually be stopped. Because you've now created a framework for them to actually be addressed.
Not all regulations have worked, right? There's been cases in some countries where they faced criticism, or I think I remember hearing, was it El Salvador or Nigeria, where regulation for crypto was still a challenge and people saw that there were a lot of gaps. So I'm just curious as to what does regulation look like as you go evolving, and what mistakes can still happen within regulation?
So there's regulation is a very tricky piece to nail. Why? Because especially when you're dealing with an innovative sector such as the blockchain industry, things are evolving. Every 6 months, even us as business leaders inside of this particular context, we have to tweak our business model. We have to tweak things. And so it's a highly evolving space, and it's brand new. And so when you're looking at it from that particular perspective, there is a need for you to have like a common sense based regulation, which is why I really want to laud the efforts of the Treasury, the CBK, because what they said is we won't take on the onerous task of trying to regulate everything, but let's just start with the service providers and make sure that we have some mechanisms for accountability, we have some mechanisms for transparency, and also like law enforcement. And so I think our bill is actually a really, really good bill. There are actually certain questions that kind of exist in terms of how exactly it's going to play out. Are we going to have a single authority? Is it going to be a new agency? And you have questions of that nature that are still being worked out.
Yeah.
But lock, stock, and barrel, like it's actually a really good bill, and it's one of the most innovative pieces of legislation.
You've talked about the regulator. So who is going to be the regulator according to this bill? Is it going to be the central bank? Is it going to be another, virtual assets management authority like we have Capital Markets Authority and all? Who's going to be the regulator? Yeah.
So that is the open question right now. So there's a way that
What was your proposal?
our proposal, we push for the to have a new authority.
Why?
It was very simple. If you look at jurisdictions such as Abu Dhabi, they have a single authority that deals with virtual assets. If you look at there's Abu Dhabi, there's Dubai as well. There's various jurisdictions that have a single authority.
Wait, so the country, so it's not the United Arab Emirates that has an authority.
Yeah.
It's specific.
Well, that's just how business works there.
Okay.
Yeah, but you have different countries that have set up a single authority to regulate virtual assets, and there's value in that, right? It doesn't have to be the way that that was originally envisioned, simply because it then creates a single authority. So imagine if you have somebody waking up every day and all they're doing is thinking about how to better regulate virtual assets. From an enforcement standpoint, if something happens, you have a single authority that has enforcement capabilities, from counterterrorism financing to anti-money laundering. Exchanges and all of those global players are dealing with a single agency. And crucially, even investors. So I have investors. And I think in the previous permutation of the bill, I would have to go and carry the investors to central bank, and then after that take them to CMA, and then take them to another agency. But if we have a single authority, it means that investors could actually come and engage with that particular authority, learn a lot more about the ecosystem, learn a lot more about everything that is happening locally, and then from there they could actually create an avenue for foreign direct investment into Kenyan crypto startups.
Banks know the CBK, then there would be a similar one, or something of that sort. I was wondering about the dangers there, and I like the regulation. I do wonder about how speculative things can be, and I'm using NFTs as an example. I think with traditional financial markets, people know their risk appetite, and you know the kinds of things that could lead to a currency being devalued, to your assets losing value, to a stock market plunging. Those are, known. With NFTs, though, it was internet excitement almost, and then now almost no one owns NFTs, and those that do own them are, they're kind of worthless.
You sound pretty hurt about that. How many NFTs did you buy?
None, actually.
Oh, really?
I was speculating.
Yes, it's safe space. It's just us
really thinking about it. It would have been I would have regretted the decision. I was thinking about it. So I'm just wondering, how then do we is there a way to protect ourselves from how speculative virtual assets can be?
So if you look at all versions of the bill, the regulators actually consider this, and they have a category called investment advisor. And this is now somebody that you could go to who will give you advice and will help you, create a portfolio based on your risk appetite and basically how much you actually have and so on and so forth. So the investment advisor license is something that would actually really help provide a lot of that clarity, not just for your individual indie investor, but institutions as well. I think there was a survey I saw that said 44% of Wall Street hedge funds have exposure to crypto, and they've committed about 10% of their portfolios to crypto. And so if you look at it, how many funds in Kenya do you know who have exposure to crypto?
I don't know. None that I know of.
Zero. You know why?
Okay.
The circular that existed. But then you have innovation that's happening.
Wait, what circular?
Oh, the central bank circular that went out that said, do not deal in crypto. And so you have a whole sector that could have been developing. But if you're looking at like the crypto industry, you have BlackRock, which is the largest hedge fund with, I don't know, like about 7 trillion of assets under management. And they're building products on top of the blockchain. But then locally here, we've actually fallen far, far behind. And so from an innovation standpoint, there's a lot of things that our traditional financial markets need to learn and start building and developing to be able to participate.
Yeah, there's some questions and feedback here. John Wangi says, do you think AI will replace most crypto service providers, like managing wallets, automating trades, or detecting scams faster than humans?
No. I think there's a natural marriage between crypto and AI. And you have all of these kinds of AI agents that are going to emerge. But I think crypto as a financial primitive is something that would find relevance inside of the bridge between traditional finance and crypto generally. And so that
Hercute-
innovation will happen.
Okay, Hercute asks, where do you see the price of Bitcoin in 10 years? Considering Bitcoin was trading at $3,000 a few years ago.
Baby, to the moon.
And now over 108,000.
Yeah.
Yeah, just
To the moon.
To the moon.
To the moon, to the moon.
Short
All right.
answer.
Yeah.
Do you think, he says in the next 10 years, do you think what would happen is almost a stabilization of Bitcoin? The more, and it's a question at large about crypto, the more crypto mainstreams, then the less speculative it is, and then the more stable it is, and then, yeah. Do you think that's possible?
I think it's possible, but it's also important for us to understand why we've had the rally from like 16,000 years ago to 108.
To 108,
It's because institutional investors are coming in, and they're bringing very, very heavy bags, and they're building very, very strong financial primitives. And this just goes back to the same point, is that we are being left behind. The longer the bill takes, the longer we don't have any kind of infrastructure, we are being left behind. So Kenya is currently number 3 in Africa. From a foreign direct investments, Nigerians are actually commanding more in terms of venture capital than Kenya inside of the crypto ecosystem, and so we need to pull up our socks and we need to get in the game.
For somebody who's, sorry, Mari.
It's a very technical
go ahead.
question, but I wondered maybe if they could get an answer. I don't understand the question, but I think you will. How will the bill curb instances of rug pulls as they are common with crypto? Maybe you could tell us what a rug pull is.
So a rug pull is a famous, so like in the wild, wild west of crypto, where you don't have regulation and all these things, you have people who come up with these projects, they get people to invest, and then they go and have boating accidents or something of that sort.
Okay.
Yeah, so it's just the basic scammers that have always existed, and the bill actually addresses that, because you'll have licensed, regulated virtual asset service providers.
Okay.
Yeah.
All right. So then they can't just have a convenient boat accident and...
Well, yeah, they would have to register.
The accident.
Yeah, they would have to register the accident. We'll need to see the OB number.
Right.
Yeah.
Before you just...
Before we say, yeah. And crucially, the death certificate.
I'm still stuck at a certain definition of the service provider. Like, now, Tony, are you a service provider?
Yeah.
Yeah?
Yeah.
Okay. Tell us, what do you do? Like, what's your job?
So my job is, so what my company is building is tokenized money market funds. And we're also building a decentralized application that allows you to move from a particular currency to another currency. So I'm providing a service to businesses who want to move from Kenya shillings or Uganda shillings into a USD position or into a Hong Kong dollar position, but fully on chain. Because so because of the fluctuations in terms of price of currency and all of those things, my protocol basically gives you the ability to convert at the best price possible.
So you build a platform.
So I am a developer.
Okay.
I've built a platform.
Okay.
And then I put it out, and then people come and use that platform. Ergo, I'm providing a service.
And they pay you a fee.
And they pay me a fee.
Do they deposit? Do they buy through you?
So the platform automatically deducts the fee on the basis of transfers.
Okay.
Yeah.
So
just like the way M-Pesa takes fees.
So the bill is seeking to regulate you in how you operate.
Yes.
And now if we had an authority that was operating in Kenya, you would have to be licensed by that authority.
By that authority.
As a licensed service provider.
Yeah.
And I can go to their website and see, is this a legitimate service provider?
Is it legit?
Okay. Which means that if you had a boating accident, does the bill provide for how I can get my money?
Yes.
Because you see there's in bank collapse and there's the deposit protection mechanism.
Yeah.
This, what does it say?
It does. So there's a lot that will still come out in subsequent legislation, but the fact that it actually requires a fit and proper test. So I need to be like the constitution of the company. Like it has to be people who don't have a criminal record, who don't have any kind of nefarious activity. So that is the first layer. You have to have a registered office where there's actually a place I could come and see you at any given point in time. And then with now oncoming regulation, there'll be capital requirements, that will actually come into force, so that if it is that I am providing a particular service, there's a certain minimum threshold of capital that I need to have to be able to provide that service.
Is this capital in the form of crypto or
Or NFTs
or traditional currency?
It would be hard cash.
Hard cash.
Hard cash.
Okay. And then,
But that's still up to the
in
regulators.
the event of a rug pull,
In the event of a rug pull, there's now enforcement, right? Because I could now take you to court. I would lose my license. So one, I'm not incentivized to actually do a rug pull because I would lose my license. But then there's actual enforcement avenues that are there, because you could now take me to court. The CBEX guys who run away with people's money, you can't take them to court.
you don't even know who they are.
You don't know
where you don't know where to find them.
You don't know where to
I'm just
find them.
wondering, digital inclusion is unequal, right? So I'm wondering who gets left behind in the crypto boom, and how that gap can be closed.
So the thing that a big part of my message to the developer ecosystem in Kenya has been begin to innovate with the world in mind, not just solving our local problems. Why? Because with cryptocurrency, we now have, for the first time in history, a single network that the largest banks are building on that you can also build on. So we are sharing the same network. If you're looking at M-Pesa, it's a closed system. If you're looking at MTN Money, it's a closed system. Banks, it's a closed system. But this is an open system that allows us to be able to build and innovate at the same level, which goes back. Now we have massively reorganized opportunity. And so the question is, how are we now building and developing our youth to be able to take advantage of these opportunities? You have innovators coming out of Argentina building massive billion-dollar projects. Argentina, Malaysia, Indonesia, Nigeria as well. So it means that because of the decentralized nature of this particular industry, if you build an application and it provides a service, it'll work. There's a very good friend of mine in Nigeria who built a very, very innovative piece of technology, and the community supported him and gave him about $2.5 million just to support him for the work they were doing, because they were actually providing value. And I want to see that replicated locally, so that we could have a lot more developers and a lot more innovation happening here, not just to solve our Chama problems, but to solve the bigger global problems that actually exist.
There's a question on, can cryptocurrency replace M-Pesa in future? I think even to the question of traditional currency as a whole in future, if that's ever a possibility. Then Kelvin Dirangu is asking, hadi nganya unalipa na Binance? It's a possibility.
I don't think crypto replaces M-Pesa. I think they play a very complementary role, simply because I think M-Pesa provides a value and has the distribution that is unmatched. But in the level, the way that I always try to pitch this to people is, you could think of M-Pesa as having functioned very well inside of Kenya, but then we needed that extra step to get to the global payment system so that we could build also on top of those global payment systems. But I don't see a scenario in which cryptocurrency overtakes M-Pesa or something of that sort.
Or overtakes traditional fiat currency, yes.
Traditional fiat currency, that's also kind of highly unlikely. I know that Bitcoiners are probably up in arms at hearing me saying this right now. But as somebody who's not an anarchist, I think just living inside of the reality of the need to have central banks that are secure and strong. There's a lot of controls that central banks need to put in place globally, but for emerging markets to ensure that monetary policy is still something that they are in control of. And so we have this nascent industry, and Kenya has taken the bold step to begin to regulate, but there's a lot of unknowns. But the central bank is bravely going forward and saying, no, we need to actually start this. And for us, we are actually very, very committed as a sector to continue to innovate with them and find a middle ground that ensures that we could find the balance between sound economic policy, innovation, and regulation.
Yeah. Just stepping out briefly, what real-world problems does crypto solve for ordinary Kenyans, or could solve for ordinary Kenyans?
Chamas is one, but also I think there's a lot of challenges when it comes to cross-border payments, and you see a lot of different companies. I think there's a famous case of Bidco that took Nick Nesbitt to court because they needed access to US dollars in a way that was not able to be satisfied domestically, and they turned to crypto, and unfortunately that trade fell apart, and they're now in court. But you have that dynamic where a lot of local businesses are turning to crypto to be able to drive payments, and you have people using crypto to buy goods from different countries, and that actually is something that is a very, very massive pressing need, simply because inside of our economies, the price of USD is subjective. There's no single one rate for a US dollar, and crypto now becomes an additional data point inside of that particular dynamic.
Okay. Just as we wrap up, someone was asking on YouTube, whose job is it then now to educate us on crypto? Yeah, and to basically give us all this information, because regulation will usually lag behind innovation. Yeah. So who educates us? Let me get the right. It's not Calvin Dirangu, but I'll find the name. Yeah. Just asking whose job is it to educate us on matters blockchain, virtual assets, crypto, all of that.
That job falls with the virtual asset chamber, which is part of what we do.
That's why you're here.
Yeah, that's actually partly why I'm here, because I run my own company, but I'm also chairman of the chamber. The chamber is a fairly new organization. We're still building out our team, but we've been engaged in advocacy for about 2 years now, engaging with governments. We've trained regulators, we've trained legislators, we've participated in public participation forums, and we do a lot of training, consultancy, and advisory, and we will continue to actually do that. But I don't think it's a job that we could possibly do ourselves, and so it really is up to the virtual asset service providers from different jurisdictions and different parts of this country to kind of emerge and take on a role where we could have very, very good education going out.
All right, thank you. This was a very well thought out, well-balanced conversation. Thank you for simplifying it for us, making it easily accessible. I also see the balanced approach you're taking to matters blockchain. Which is a bit different from what we've seen. So much appreciated.
It's more measured.
Yeah, it's more measured. Tony Olendo is the chair for the Virtual Assets Chamber of Commerce.
Do you now know what virtual assets are?
He's been with us.
We have a believer.
Blockchain.
Shamba kwa blockchain. Umesikia hapa. Of course, it's responsibility. Tokenization also. Yes. He's been speaking to us on the Virtual Asset Service Providers Bill, and of course matters virtual assets all through ongoing conversation. Thank you so much for the many questions. Our YouTubers are deep in conversation with themselves. That conversation continues even after the show ends. Please do continue to ask the questions. We'll be back here 6 to 10 a.m. Kesho asubuhi. Kesho ni Thursday. Who's coming up next is, of course, Winnie and Mwekali.
Yes.
They're talking about matters health on your world. But from us, it's goodbye until
Nation FM.
Yes, on Nation FM, it's Claudia Naisabwa and Brian Aseli. Of course, on the Vibe Shift, 10 over 10 energy. Those two, waskize tu. I left him in good hands. I'm so happy. Hi, Koherini.